What are the focuses for us at the moment as we watch the Dow Jones Industrials moving higher by 107 points and having just made it through the second quarter earnings season, is the situation with earnings. And I'll tell you, Elon Musk came up with a very interesting comment about earnings. I wonder if we can put it up, at least to the right part of the screen, because he had said in his letter 2 weeks ago to his employees that quarterly earnings force him and company leaders to make short-term decisions that are not necessarily the best thing for long-term decisions. Here's the quote: "Being public subjects us to the quarterly earnings cycle that puts enormous pressure on Tesla to make decisions that may be right for a given quarter, but not necessarily right for the long term." So as we keep the picture up on the screen, I want to bring in Scott Shay of Signature Bank to talk about this. Let's blow out the quarterly earnings and make them perhaps semi-annual. You see any downside to this?
There are downsides, but I think they're overweighed by substantial upsides. I think certain businesses, for example, banks, do need to disclose at least quarterly balance sheets and the like, because I think investors need to know that their money is safe. But the whole idea of quarterly earnings is part of a real disease that the American economy has of short-termism. And I think the more we can do to put businesses thinking long-term, it'll be better for productivity and better for the American worker.
So if I am hearing you correctly, you're saying that maybe banks should be excluded from this new normal if there were to become a new normal, and that banks should be held to quarterly numbers because it's the psychology of the nation. You don't want a blowout or a panic.
Correct.
That's funny because Jamie Dimon, of course, head of J.P. Morgan Chase, just wrote an op-ed with Warren Buffett, and he's sort of at the forefront saying, get rid of quarterly numbers. This may enrage the banks.
Well, actually, what Jamie Dimon did was a little bit more subtle. He said there shouldn't be quarterly guidance, particularly for banks, but he wasn't against disclosing quarterly earnings. During the financial crisis, for example, I think investors and depositors really needed to know that the money was there. But broadly, I totally agree. Guidance is a bad idea. Announcing earnings quarterly is a bad idea, but we can disclose our balance sheets. We can disclose our, any issues.
Here's what Warren Buffett said with Jamie Dimon. The pressure to meet short-term earnings estimates has contributed to the decline in the number of publicly traded companies in America. And we looked at some of these numbers. You know what? I used to say, oh, there's 7,000 publicly traded companies in America when I first got into the business. Guess how many there are now, folks? 3,600. That number down some 50%. And the argument is it's too much of a pain. Nobody wants to be subjected to all this criticism 4 times a year. Right. And on top of it, if they are public and one tiny bit of bad news for one quarter comes out, it could sock their price down, they get acquired, or they go out of business.
There's no question. And that's why you see so many unicorns. You see companies in Silicon Valley, elsewhere, resisting the urge to go public.
Well, Uber and Airbnb would have done so by now in 1990, right?
Right, for sure. But I think it's part of a bigger issue, unfortunately, for the American economy, which is we need to start thinking long-term about making investments in things like quantum computing, AI, all sorts of things which are not going to produce results in the near term, maybe not this year, next year, even 2 years. But for the economy, we need to be at the forefront of those kind of investments.
Vice President Pence is speaking, and as soon as he introduces President Trump, we will interrupt our conversation at the moment. But President Trump has been pretty supportive of the idea once he heard about it from Indra Nooyi of Pepsi, which I found interesting. And she's not the only one. I think there was a Duke professor who did a survey. We have a picture of this, and they asked, how many of you would like to go to once a year? Forget twice a year. They all wanted to go once a year. I think the number was something like 60% had said, yeah, let's go annually. And then some 26% said semi-annually and 14% said, let's stay quarterly. Let me play devil's advocate here. There are some who believe that not only should there be quarterly numbers, that some companies should be putting out real-time changes constantly for one reason. Because it decreases the possibility of a rumor running rampant in the markets and having stocks halt and all of this drama. I mean, what do you make of that? That would be no way, right? Daily or real-time updates on company information?
we already have enough volatility in the marketplaces, and I think trying to have monthly numbers, I think, would be a serious mistake. And again, if you want to combat short-termism, we need longer, not shorter.
Scott Shay of Signature Bank, thank you very much. And I find it also very interesting that Elon Musk, had he only been held to, semi-annual earnings, and this situation had come up, it might have smoothed out the bumps, and what started as massive gyrations end up basically where you were when you first started mentioning these things. How would that have played out with Elon?
Well, Elon is one of the reasons why companies don't want to go public. I mean, he's almost the poster child. He wants to go back to being private. I mean, he yearns for being a unicorn again. So,
isn't that the classic example?
That
These
is
quarterly numbers just, ruin the opportunity to make the correct decisions long-term for you, the investor. Speaking of which, a lot of people are invested in index funds. We've got the Dow up 112. The S&P looks rather healthy. How do you see the trade talks that will happen between China and U.S. trade representatives this week?
Well, I'm guardedly optimistic. I think the real issue for our clients is not even so much the tariffs, but the intellectual property issues, which are complicated. We live in New York, and a lot of our clients really worry about doing business in China and finding that their intellectual property somehow finds its way into other products. And I think more important than the tariffs for our client base are fixing those issues. And frankly, they're really rampant, and they've cost our economy, just like short-termism. Ignoring those issues and allowing chip technologies, quantum technologies to be made in China, major problem.